Hello and welcome to the week ahead video with me, David Madden. Before I discuss the major events of next week, I'll just take a quick recap of the major events of the week just gone. We've seen a broad decline in the US dollar this week, and it all started with the Jackson Hole Symposium in late August. The Federal Reserve Chief, Jerome Powell, didn't map out a timeline to begin tapering the Fed's very generous government bond buying scheme, and with that we saw a broad decline in the US dollar. Also during the week we had a much worse than expected ADP employment reading from the US, so that really sparked fears that the Federal Reserve might not look to begin tapering their bond buying scheme until possibly the first quarter or even later of 2022. So with that we did see a broad sell-off in the US dollar, hence why we're seeing a strong move to the upside in euro dollar. We can see here in the last few hours the currency pair hit its highest level since early August, so we're talking about a 1 month high on the currency pair, which really highlights how bullish the market has been. While euro dollar continues to hold above these three simple moving averages, it's likely the recent upward trend will continue. A move higher from here could see a target 1.1907, and a move beyond that could see a target the psychologically important 1.20. Now, it is worth noting that I'm recording this video in advance of the US non-farm payrolls report, so any of the levels I talk about might be out of date. Now, the major events of next week are: on Thursday we have the European Central Bank interest rate decision, on Wednesday we have the Bank of Canada interest rate decision, and on Tuesday we have the Reserve Bank of Australia interest rate decision. So we have a number of major central banks reporting announcing their interest rate decisions next week. The European Central Bank is going to be the big one to watch out for. We can see part of the reason why euro dollar had such a strong move to the upside in the last few sessions wasn't just purely on the back of a weaker US dollar. We have seen some positive economic indicators out of the Eurozone recently. For example, the unemployment rate fell to 7.6%, a 13-month low. The latest manufacturing reading for the region came in at 61.4. Keep in mind, any reading above 50.0 denotes an expansion or positive growth. So a reading in the low 60s really shows us that growth continues to be strong in the region. We've also seen the headline CPI reading in the region increase to 3%, a 10-year high. Some of that down is partially due to higher commodity prices and energy prices, but keep in mind there's also a large jump in the core CPI reading as well, so that indicates that underlying demand is actually quite strong, hence why we've seen such a positive move in euro dollar. It's been a combination of both a strong euro and a weak dollar. Now, also in terms of what can we see from the European Central Bank, the European Central Bank are unlikely to change their monetary policy, but we could hear commentary about how the Eurozone economy is improving, that they're taking steps in the right direction, although the policy is likely to remain ultra loose in the nearer term. So with that's possible. We could see a continuation of the positive move in euro dollar, because if there's commentary in relation to how the region is continuing to expand, that could in fact help the currency pair move along higher. I'm now taking a look at the DE30, the main stock market over in Germany. Broadly speaking, in the last few weeks and months, it has been moving to the upside. It's worth noting that the all-time high that was set in mid-August hasn't been retested since. And even though the market hasn't made much in the way of higher highs, the lows that we've seen in the last few weeks are comfortably above the lows that were seen in mid-August. So the broader upward trend seems to be intact, even though we've been trading in a reasonably small range in the last few sessions. Once again, the updates from the European Central Bank will be very much in focus, because traders will be looking out for any signs in relation to policy change. Economists are not expecting any interest rate hikes or any altering of the bond buying scheme, but the language the European Central Bank use is very much going to be in focus. If the DE30 can hold above this zone here in around 15,759, it's possible the broader upward trend will continue. A move higher from here could encounter resistance at 15,982, and a move beyond that could see it potentially retest the record high of 16,032. Also, next week we have an update from the Bank of Canada will post their interest rate decision, but we also have an update from the Reserve Bank of Australia. At the start of this video, I talked about how we've seen a broad sell-off in the US dollar. That in turn has helped push up the Australian dollar, AUDUSD, has hit its highest level since early August. So we're talking about a 1 month high achieved on the currency pair, which really underlines how bullish the market is. While it continues to hold above these three simple moving averages, it's likely the broader upward trend will continue. A move on higher from here could see a target 0.7426, and then a move beyond that could see a target the 0.75 region. Any move to the downside in the currency pair could find support from this simple moving average here, which comes into play at 0.7365. Economists aren't expecting any major changes in terms of interest rate changes or the stimulus package, but in July, the Reserve Bank of Australia did come out and say that they'd be willing to support the economy in its period of transition from a recovery mode to expansion mode. So keep in mind, we're likely to see volatility on the currency pair on Tuesday when the RBA announced their decision. That's all from me. Thank you very much.